Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
What's up, everyone? This is a short episode of the Investor Financing Podcast. And today I want to talk about a built-in BRRRR program. We call it fix to rent. So the way it works, and I like this a lot because you don't have to refinance the property. So you find a property that needs work and you're going to do a traditional BRRRR where it would be two separate loans. Well, now we have a solution. We'll lend up to 90% of the purchase price and 100% of the repair costs, just like a traditional fix and flip loan. And then once the property is fixed or renovated and a tenant is in place, we like to see 90 days of seasoning from the time of ownership. We'll actually do a BPO and modify the existing loan into a 30-year fix. Also, we have the option of doing a 5, 7, or 10-year fixed, amortized over 30 years. And this is all done in your LLC, so it's not showing on your personal credit report, which has many benefits as well, like your utilization and your debt ratios for conventional financing. So I really like this strategy because what I'm doing, for example, in Indiana myself, I can go in and get a fix and flip loan.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Up to 90% of purchase, 100% of rehab. So I'm coming in with just 10% plus carrying costs and closing costs. So it's limiting my out-of-pocket expense. Then after the property is remodeled and stabilized with a tenant in there, as long as the debt service coverage ratio is over 1.25, I can go up to 75% on a cash out refinance using new appraised value. We do have kind of different tolerances between month 4 to 6. After 6, we don't have any tolerances at all. So you can go 75 on a cash out. But if it's between 90 days to the 6-month mark, we'll do a 5% haircut on overall maximum allowable loan to value. But you're able to use new appraised value. So let's say you bought it for 100 and you put in 25,000. Now it appraises at 200,000. We're able to go up as high as 75% of that new appraised value. So even if it's within the 90 to 6-month mark, 90 day to 6-month mark, we're still able to get you 70% cash out on new appraised value, which in turn is usually giving you enough of your cash back. Now you're in a fully stabilized long-term loan without having to go the traditional route of trying to get bank financing and having to wait 6 months because some of them have 6-month seasoning clause. So it's really, really good product for you. So that's the fix to rent. I call it the built-in BRRRR program, right? Everybody's talking about BRRRR, and BRRRR's a great concept and a great strategy to scale your portfolio, right? Because at the end of the day, most of the investors I work with, they'll do their share of flips, but they want to buy and hold, get their money back, and now they've got $300-$400 a month cash flow on that property, right? How many of those do you need to reach your financial freedom mark of being 100%er? So that's kind of the neat new loan that's out, and I encourage you to kind of explore those options. The rates are really good. I mean, you're talking about a portfolio loan, not a bank loan, so you don't have to provide tax returns. All we look at is loan to value, if it's a rate and term or cash out refinance, and debt service coverage ratio of 1.25 or greater. If you're newer investor, we want to make sure you have a professional property manager in place, especially if it's out of state and you're a California investor and you're buying something in the Midwest, right? So we do ask for property management agreement, your lease agreement. We pull a credit and background report, and pricing's based on credit score and LTV, and we have different thresholds. 700 credit score gets you the highest leverage possible. If it's between 620 and 650, you get a little less leverage, right? Because everything's credit based, right? So on these type of programs, and experience based. So if you're interested in learning more about the fixed to rent, or what I call the built-in BRRRR, please feel free to reach out. You can go to investorfinancingpodcast.com and just fill in your contact information, and we will schedule a call, talk about all the different programs: portfolio loans, bridge on multifamily, long-term rental loans for 1 to 8 units. We have a small balance multifamily product that's 50 units and below. So there's lots of options out there. There's lots of capital. And now going into a market cycle where we're at, I think it's the market to start looking at creative financing deals and to buy for long-term and fixing those rates, right? Like to stabilize and to not have to worry about financing for the next 5-10 years, because you're locking into low interest rates right now, and the rates aren't going to go much lower, right? What are they going to do in a few years? They're going to go up. So it's a good time to refinance your debt into long-term loans. This way, if the market does decline a little bit, you're not worried about it. You get your set payment and so forth. So anyways, happy investing, and thanks for listening to another episode of Investor Financing Podcast. Talk to you soon. Bye.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.